Welcome back, my friends. The news today is that Berkshire Hathaway dumped $2.3 billion of Bank of America shares in a 6-day sale. Berkshire Hathaway dumped more Bank of America shares this week, making it 6 straight trading days that Warren Buffett's conglomerate has reduced its stake in the bank. The Omaha, Nebraska-based holding company sold another 18.9 million shares via transactions on Monday, Tuesday, and Wednesday, at an average price of $42.46, raising $802.5 million, a new regulatory filing showed. Over the last 6 trading sessions, Berkshire has unloaded 52.8 million Bank of America shares, worth $2.3 billion, reducing the stake to 12.5%. Berkshire still owns 980.1 million Bank of America shares with a market value of $40.3 billion, a distant second to its $172.5 billion holding in Apple. Berkshire is required to disclose its stock moves within 2 business days after they are made, when the stake in any company exceeds 10%. But before we get into all of that, I would like to thank everyone who views my videos. If you would like to support the channel, please see the link to buy me a coffee in the video description below. And please hit the like button and leave me a comment below. I would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Buffett could be trimming the bet on valuation concerns after Charlotte-based Bank of America outperformed the broader market this year. The bank stock is up more than 25% in 2024, compared to almost 14% for the S&P 500. It marked the first time since the fourth quarter of 2019 that Berkshire cut its Bank of America stake. In 2011, the Oracle of Omaha bought $5 billion worth of the bank's preferred stock and warrants to shore up confidence in the lender as it grappled with losses related to subprime mortgages in the aftermath of the financial crisis. Just last year, Buffett spoke highly of the leadership at Bank of America, even as he offloaded other financial names. In 2022, Berkshire exited a handful of longtime bank positions, including J.P. Morgan, Goldman Sachs, Wells Fargo, and U.S. Bancorp. I invited myself in many years earlier, and they made a very decent deal for us. And I like Brian Moynihan enormously, and I just don't want to sell it, Buffett said in 2023 of holding Bank of America. Given that Berkshire still has a huge position, it's the bank's biggest shareholder by far, the sale could just represent profit-taking. BofA has jumped 27% so far this year to a quote of $42.60. That's 3 times Berkshire's average purchase price of $14 for all of its BofA shares, according to Barron's. So there's plenty of profits to take. But Buffett also could be taking the first step on the road to completely exit BofA. Or Berkshire, which now has a 12.8% stake in BofA, may just want to drive its stake below 10%. Barron's writer Andrew Barry noted. That way it wouldn't have to report trades of the stock to the Securities and Exchange Commission within 2 business days. Meanwhile, Bank of America released its second quarter earnings last week, and most analysts gave the news a positive reception. The biggest highlight was the company's encouraging net interest income (NII) outlook for the remaining half of the year. Morningstar analyst Suryansh Sharma wrote in a commentary, "NII is the difference between a bank's interest revenue and its interest expenses. Management expects NII to rise to around $14.5 billion by the fourth quarter, from $13.9 billion in the current quarter," he said. Profitability in the second half should also be boosted by expense control and relatively strong fee income in the asset management, investment banking, and trading businesses. Sharma plans to increase his $38 fair value estimate for BofA's stock price by a mid-single-digit percentage soon. He assigns the bank a wide moat, meaning he thinks it has competitive advantages that will last at least 20 years. There are a few possible reasons for this move. Market valuation. Buffett has expressed concerns that the stock market is currently overvalued. Selling some of the Bank of America shares could be a way to capitalize on the high market prices. Profit-taking. Bank of America's stock has performed well this year, rallying 27.4% to its highest levels since March 2022. This could be an opportune time for Berkshire to take some profits. Portfolio rebalancing. Berkshire Hathaway has been a net seller of equities for 6 consecutive quarters. This sale might be part of a broader strategy to rebalance their investment portfolio. Despite the sale, Bank of America remains one of Berkshire's largest holdings, indicating continued confidence in the bank's long-term prospects. Determining whether Bank of America shares are overvalued involves looking at several financial metrics and market conditions. Price to earnings, PE ratio. Bank of America's trailing PE ratio is around 15.05, which is relatively moderate compared to the broader market. However, its forward PE ratio is 1300, suggesting that investors expect earnings to grow. Price-to-book PB ratio. The PB ratio is 125, indicating that the stock is trading at a premium to its book value. This is higher than the historical average for many banks, which could suggest overvaluation. Market performance. The stock has rallied significantly this year, reaching its highest levels since March 2022. This strong performance might be driving the perception of overvaluation. Analyst opinions. Some analysts believe that the stock is trading at a premium, while others see potential for further growth due to strong fundamentals and a positive outlook for net interest income. Overall, while some metrics suggest that Bank of America shares might be overvalued, others indicate potential for continued growth. But what do you think? Please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icons so that you are notified of upcoming videos when they are released. Please share this video on social media. And before we end, a word from the sponsor of this video. Today's sponsor is ProWorldNet.com. ProWorldNet.com is a job website specifically dedicated to licensed professions. Doctors, including any type of specialty. Nurses, and that includes all grades of nurses. Lawyers, regardless of area of legal focus. Teachers and professors, from kindergarten through graduate school, as well as any kind of job that requires a government license or certification. And ProWorldNet.com also includes short-term gig-type jobs as well. So be sure to check out ProWorldNet.com if you are looking for a job or an employee. Thank you for watching.